Top 5 Biggest Economic Risks 2023. Hello and welcome to today's video. The year 2022 has come to an end. It's time for an outlook on 2023. What are your expectations for 2023? Economically, it will certainly be an exciting year, which, however, contains some risk. Let's look at the stock market alone. For example, some are letting their ETF savings plans continue to run. Some have been buying massive amounts of stocks, and some are gathering and holding their cash so they can jump in with high liquidity when the crash occurs. Let's take a quick economic look back at 2022. After the 2 years of the corona pandemic, which affected the global economy in a way never seen before, 2022 was supposed to be a year of recovery. However, on February 24th, Putin launched a war of aggression on neighboring Ukraine on behalf of Russia, bringing a wave of Western sanctions, energy concerns, and most importantly, fear and uncertainty to the global economy. Inflation has climbed to record levels due to the massive increase in energy costs and food prices, which has hit small and medium-sized businesses especially hard, and therefore massively affected supply chains. The recession was in full swing, and will remain with us in 2023. The economic forecasts for 2023 differ widely in this respect. Many fear the third worst economic year after 2009, the recession after the financial crisis, and 2020, the economic recession due to the global restrictions of the corona pandemic. Others describe the economic forecasts for the years as not devastating, whatever that means. The top 5 risks to the global economy in 2023 are: 1. Escalation of war. Vladimir Putin, currently in his 4th term, is the president of the Russian Federation. On February 24th, 2022, he launched an invasion of Russia's neighboring country, Ukraine. This was supposed to be a liberation maneuver, which was started mainly in relation to the separatist areas in the east. Worldwide, the war was heavily condemned, and especially the European Union felt economically, geopolitically, and politically threatened by the war that had broken out in Europe. Furthermore, NATO became involved, which again strengthened the fronts between East and West. Several severe economic consequences can be derived from this. The West declared massive sanctions on Russia and its allies, which made financial transfers and trade almost impossible. Many companies have stopped cooperating with Russia or maintaining branches in Russia for moral reasons. Where does China stand? This is a question that is very difficult to answer. The same is true for India. Both China and India have not directly sided with Russia in votes, but by abstaining they have also not acted against the war and Russia, a major ally. Thus, by abstaining, they have at least taken a stand against the West. The war can escalate in very different ways, and it can sometimes happen very quickly that an escalation stage increases. On the one hand, the war can spread across national borders. If Russia invades more countries, this will have further serious consequences for the world economy. Furthermore, the war can be won by the Russians. If Putin mobilizes all military forces and takes Ukraine completely, the question is, what will happen to war-damaged and destroyed Ukraine afterwards? Putin will introduce a government in his sense and let the country exist as such, or will he incorporate it into the Russian Empire, according to his fantasies of world domination? On the other hand, it is not clear yet what military weapons will be used. The use of nuclear weapons is ruled out by all realistic people as too cruel. But in war, no rules of humanity apply. Moreover, most people would not have trusted Putin to invade his neighboring country either. In the end, it depends more on Putin's personal factors whether he will use nuclear weapons in the war or not. Will China, for example, take a cue from the Russian invasion and do the same with Taiwan? All in all, Putin's unpredictability and influence in the biggest economic risk for 2023, in our opinion. The following 4 risks were triggered by Ukraine's war of aggression and have a lot to do with fear and uncertainty, an economic risk that should not be underestimated at all. If you like this video, we appreciate a thumbs up and that you subscribe to our channel. 2. Shortage of gas and energy with outages. Securing gas and energy supplies through the winter has been the primary focus of most countries in recent months. So far, this has worked well. Even though settlements are pending and many households will be hit hard by the immense sums involved, both businesses and households are likely to start the next winter in 2023 with a different attitude and behavior. According to the U.S. Energy Information Administration, or EIA, the country with the world's largest gas reserves is Russia, with around 1/3 of gas reserves located there. It is followed by the United Arab Emirates and Iran, each with 10% of gas reserves. The USA accounts for about 5% of the world's gas reserves, so the USA has its own gas resources and is also one of the largest gas producers in the world. Nevertheless, Russia has about 25% more resources at its disposal. In the USA, conventional gas is extracted from gas fields located near oil fields, and unconventional gas is extracted through shale gas, coke gas, and fracking, with 21% coal, 38% gas, and only 18% renewable energy in 2021. The US will use its own gas reserves for self-supply, resulting in declining exports. In addition, increasing global demand will significantly increase the price. European countries may well experience energy interruptions or outages. However, more than 50% of the energy supply here is covered by renewable energies. However, a large proportion of companies rely on gas for production, which has so far been sourced from Russia, just as gas heating systems are installed in many households. 3. Interrupted supply chains. In particular, the latest corona wave has again led to increased restrictions in China. However, even if a laissez-faire policy is adapted and all restrictions are lifted, the corona pandemic will cost the People's Republic of China more than 1 million lives, according to forecasts by The Economist. This labor force cannot be compensated in the short term and will cause disruptions in the production of resources, production and transportation of goods. Spare parts would have delivery times for months, and the just-in-time production of many companies would be threatened. The dependency relationship that many companies have entered through outsourcing and globalization will be waiting with economic consequences in 2023, resulting in a wave of bankruptcies. 4. Global trade collapse. This risk relates directly to the previous point. Many countries are extremely dependent on imports and exports, and therefore trade, which will slip into recession. Also, the trade conflict between the US and China is coming to a head again. In addition, it is unclear what China will do politically next year and what positioning the country will take in the Ukraine-Russia war vis-a-vis Russia and the West. Many emerging markets are currently experiencing a massive devaluation of their money, which cannot be controlled as a financial crisis in the current economic situation, due to high inflation and the withdrawal of capital due to uncertainty among investors. The economy has slipped into a severe recession, or even depression. 5. Declining consumption. How do you protect yourself from an economic recession or even depression. Tip number 1 for the individual and the population is to increase liquid capital. Translated, this means that many investors have withdrawn their capital from various investments and are storing it as available money in their bank accounts. Due to the rising interest rates, this is associated with low risk, with not too strong losses, and offers the opportunity, in the ideal case, in the low point of the recession, with a lot of capital, to buy and invest cheaply. Also, the increase in the price of food, energy, and gas means that many people can afford less and thus cut back on non-essential spending. The purchasing power of people worldwide with middle and low incomes, but also with high incomes, will fall. As a result, people will use less money to buy consumer goods, travel, or invest. This hurts businesses in 2 ways: lack of capital for investment and declining consumption. Lower sales combined with supply shortages and falling demand is extremely damaging to the economy. The most vulnerable in society will be affected, which from a financial perspective means older people with low incomes or pensions and the lower class. Socially, there will be large disparities, as high liquidity will also allow some investment opportunities for the wealthier population. There will also be geographic differences, and some countries will be hit harder by the economic recession than others. Social inequalities and social crisis will be exacerbated, which always fuels the risk for unrest and causes suffering. Due to high inflation, lack of reserves, savings, and lack of protections, a large part of the population will emerge as losers of this year. That was today's video on the top 5 economic risks in 2023. How are you preparing for an impending recession? Thanks so much for watching.